Hello, dear traders and partners of AMarkets. My name is Daria, I'm the financial advisor, and today we're going to discuss the situation in the global financial markets. So let's get started. Euro-USD has extended its 4-week downtrend towards hitting a fresh multi-day low as the trading week begins. That said, the major currency pair dropped to the lowest levels last seen during May 2020, before taking a breather around 1.0860. The bears, however, keep reins amid broad risk-off mood and escalating pressure on the Fed to lift benchmark rates at a faster pace due to increasing inflation. An upbeat US jobs report and hawkish comments from Chicago Fed President and former EC member Charles Evans act as an additional bearish indicator for the Euro-USD prices. The US jobs report for February showed that the headline non-farm payrolls rose by 678,000, well above the median forecast of a 400,000 figure and upwardly revised 484,000 prior. On the same line, the unemployment rate dropped to 3.8% versus 4% previous readings and 3.9% expected. Next, AUD JPY, and the pair has been supported in the open due to a spike in global commodity prices spurred by Russia's invasion of Ukraine. The fears of an inflation shock in the world economy as oil soars on the prospects of a ban on Russian crude supplies has lifted the commodity-linked currency AUD. Meanwhile, AUD JPY, which usually walks 2-2 with risk sentiment with a high bid to global stocks, is rallying despite the sell-off in US futures and the Nikkei on Monday. The S&P 500 futures are off by over 1.5%, while the Nikkei is losing 2.9% at the time of writing. Additionally, the AUD surplus is a supporting factor, and US dollar receipts in commodities sold will be something that traders will continue to weigh up for the forthcoming weeks. Last XAU USD, and despite recently easing from the 2003 holders, gold prices remain on the front foot around a 19-month high as traders seek risk safety amid the ongoing Russia-Ukraine jitters. The quote eases to 2,988, up 1% on a day, while heading into Monday's European session. The yellow metal refreshed multi-day high earlier in Asia as risk of escalated on the weekend news suggesting Russia's intensified military invasion of Ukraine. On the same line were comments from the West suggesting an oil import ban from Russia. Recently, Bloomberg said that the US also weighs acting without allies on the ban of Russian oil imports. It's worth noting that Russia's stand as the world's third biggest oil producer adds to the global supply crunch and strengthens commodities additionally. As a result, gold buyers are likely to keep reins, but the pullback moves can be ruled out should this week's US inflation figures favor the faster Fed rate hikes. So for now, these are the main trading ideas for the upcoming trading session. Thank you for your attention, subscribe to our channel, and we will do our best for you to reach success trading with AMarkets.